Since the start of 2024, everyone was talking about rate cuts, and rate cuts.
Rate cut.
Not ending with the Biden administration, but yeah, that cut actually happened 3 weeks ago. I know I'm a bit late to the party, but the celebrations are still ongoing. And also party, I was waiting for the official Fed minutes, which they was just released recently, to get a better understanding of what should have done if not this. This video will explore the underlying reasons why this major cut happened, and all the minor cuts ahead of us or not. Should have done it 2 months ago. Yeah. But the committee was just sleeping, assuming that there are no problems at the forefront. Inflation was a bit higher, but a cut of 25 basis points would have came with no harm. They were literally underestimating the labor market. In the light of their ignorance, a 25 basis point cut would have just done fine. The learning national debt was also there, but now out of nowhere, they just only thought it's time to cut. Fiasco for this was just an event that made people think like there's something wrong now with the economy, demanding an urgent rate cut. But I think the Fed just did it late, because of the stock market giving us a series of all-time highs. Fed was a bit reluctant because of the strong market, but now this latency made job market to suffer in September, so they needed to cut. The timing of the cut is almost right. Yeah, it will be explained till the end of this video, but the intensity of cut is just another problem. This historical cut is everything this economy needed, but it was a bit oversized. My bad, this habit of moving at race too fast just ruined my life. Yeah, I can say it's a bit oversized and an exaggerated cut. I think it's just me who is exaggerating everything. But it was everything this economy needed at the moment. But with this much intensity, like 0.25% instead of 0.5%. Biggest problem in cutting majorly is that it really caused some hot concerns among investors related to the state of the economy, like risk assets. Gold. Yeah, gold is the risk asset. People move to it when something is wrong. Also, since the rate cut, the values sugar spiked. This bigger rate cut is giving signals to the investors that something is wrong with the economy, and also that's why the intensity of Feds this year is too big. And yeah, despite Powell saying
The U.S. economy is basically fine.
there's something wrong, and other words, AI is the problem. Yeah, it's AI. Partially, I can say because the belief that a condition of economic activity is robust. The recent press release, Fed says, recent indicators suggest that the economic activity has continued to expand at a solid pace. Pause. This assumption is purely based on the activity as a result of higher AI-related activities across various sectors. AI is in huge demand. As I said in a LinkedIn post 2 weeks ago, an outlook by a Big Four accounting firm, KPMG, says about 64% of the top CEOs says that they would invest in AI regardless of economic conditions. The base of fear of missing out in terms of AI advancement, every sector of the economy is just investing in it hugely. Yeah, regardless of economic conditions. So even if they are bad. So this part of the economy is robust and will stay so. But the other core businesses are struggling right now. The logistics, they are the core business. Every business that really use in logistics businesses to deliver their products to their customers. The bankruptcies are rising in that sector. The unemployment rate is rising in that sector. And also, the bankruptcies across the US is also rising recently. And this concept is being reflected in the stock prices also. Indexes containing AI stocks are making all-time highs one after one. Indexes with the following conventional stocks are not catching up the pace. And we needed this cumulative bigger cut to support these sectors and struggling businesses. Am I just saying the Fed made a decision of cutting the rates by 50 basis points? Yeah, it's the only logical reason to cut. Cutting slowly was only logical if the Fed did not want to panic investors that there's something wrong with the state of economy. But yeah, there's this wrong which I explained already. It's just whitewashing by saying these words to not cause any panic among investors. What about the further cuts? Actually, the notion of slow and steady wins the race can be applied here. We all know the Fed is not going to make major shifts right now, as the new unemployment rate data has improved. But what's more interesting to know is that the fact of first rate cut will take some major time to show some good symptoms in the state of economy. Twitter Friedman says there are long and variable lags in the effectiveness of the monetary policy. So we can clearly say the cut effect will be fully visible in a couple of months. If Fed cuts aggressively, the inflation will ramp up back. So it's a big no. For now, if the Fed is enough confident to cut in smaller parts when the elections are right ahead of us, if I specifically talk about the upcoming decision by Fed on the November 7th, Fed is in actually hot waters. Current data does not support even a minor cut. Core inflation recently ticked up, beating the analyst expectations. And also, on the other hand, initial jobless claims are skyrocketed recently. Because the Milton hurricane is coming with the people's risk of losing their jobs. Right now, if this goes in the projected way, then the Fed is going to skip a rate cut in November. So skipping a cut are also on the tongues of some different insiders of the Federal Reserve and also some experts. But that the economy can only be handled with the modest cuts coming to an end between 2 to 3%. How does elections are going to play here? Fed's next meeting on November 7, the elections are expected to be held on November 5. It's way closer, but Fed generally says every decision related to the monetary policy will be solely based on the data and outlook. Federal Reserve, being a separate entity, they are not politically motivated as per the law. Going to justify this statement. But we can see what the Fed did in the past election years. During the past few years, Fed typically remained resilient to the major policy shifts, getting huge during an external sourced crisis and some internal ones, mainly focused on cutting rather than increasing the rate. We can clearly say here, this change in monetary policy is extremely sensitive to the economy. Ending it with the political motives does not make sense at all. Yeah, let's see what Fed got for us in November. I hope guys I made all the points clear to you, and if you got some valuable information out of this video, then don't forget to show some support. Bye.